Well, livestock pictures change as well with this type of corn scenario plugged in. I went ahead and showed up a new break-even type of chart here to see that to see really where these hog producers are looking at in terms of profits or losses here with this new corn feed cost issue. This chart is based on $6 corn, not our $6.50 projection, but I just wanted to show that based on $6 corn, which is the minimum level it seems like most in the industry are talking about. You're looking at $83 break-evens. And if you look at most of these deferred futures, well, there's a few months here where we're not going to quite make that 83 price. Looks like maybe by mid next year for the summer months, they're back above there. So the main point is now that we're talking to producers, we're saying, wow, have you worked up break-evens yet? We're looking at almost $83. Is this something that you're concerned about? And obviously at this point, we'll have a lot of producers talking about that issue here. But main thing for the long-term picture for the breeding herd, this is going to be one thing which is going to stop or certainly hinder expansion, and expansion was going to happen and hit in 2011. Keep in mind, as far as that breeding herd goes, you've got about a 10-month lag between a market signal, which is this move right here in corn, and production. So you have a pregnancy of about 3 months and 3 weeks. You have birth to slaughter of about 6 months, so a 10-month lag. So if you're going to say that any of these numbers will be impacted by production, it's going to be hitting the July of next year and beyond contracts. All the other hogs for the next 9 months, they're already either pregnant right now or they're actually on the ground. So keep that in mind. July and beyond are the only months which can really be affected in a serious way by these changes here. As far as the breeding herd, I just want to point out that look at this number compared to these 2010 numbers. For the most part, our breeding herd is starting to stabilize a little bit here. And as I said before, we are actually ready to switch into expansion mode here, maybe going into 2011. So hopefully this will put a brakes on that one. But one problem like we saw here today with today's lower price action is this problem right here. Before this report came out on Thursday, we were already talking of, you know what, come October, we're going to have some extra numbers show up at the front door. And actually last week was the first week where we did see that. Last week's kill, only down 2%. All these other weeks since July have been down 6%. So we've got a big change in supply, which, as I said before, yeah, you may have some issues with feed costs. Maybe they're going to trim the number of days that they feed these hogs out. But for short-term numbers, it's not going to affect production that much. And hog prices aren't based on corn. Hog prices are based on the supply of hogs hitting at a certain time and the demand for that pork. That's why we actually could see the October and December still break a little bit here going the next few weeks, even in the face of this $5 corn. So as far as hogs go, we like this from a long-term standpoint, maybe turning a little bullish here than what we expected, but we're only going to buy these far-out contracts. July is where we're trying to buy 85.10. That was filled here today. Over on the cattle side, I just want to point out that we can have, just like a few months ago, we had double-digit increases in placements. We can have double-digit decreases in placements as well. Look what happened during the grain price rally, which peaked in mid-2008. We had a couple months of double-digit drops. That's probably what's going to happen. Maybe not yet on this next cattle and feed report, but maybe the one for November or December. So keep in mind, this certainly did change the ballgame for 2011 base slaughter numbers, because lower placements right now means lower slaughter levels in spring and summer 2011.